Today we're going to be talking about narrowing your trading down to one or two of your best trading setups. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Hopefully everybody's had a good week in the markets. We've had a ton of movement. We've had some great trade setups on the pound crosses. I know a lot of great setups have happened for traders. They're starting to see the combination of the timings, the numbers, the stop hunts, the 50 pips, all the things that we've talked about in terms of keeping it simple and scaling in size. I've had a lot of questions from traders sending me screenshots and different trades that they've taken. Today I'm going to try and really clarify some things about our 12 candle window, but about also identifying one or two trade setups, not trying to trade the 12 candle window every single day, but understanding what's happening in the 12 candle window, being able to look at 4 or 5 pairs or 6 pairs, whatever you're comfortable with looking at right now, and identifying the one or two setups that you recognize as a high probability opportunity for either selling high or buying low, whether that's a trend trade or a stop hunt reversal or a New York reversal, whatever that may be. The object is to be able to identify the trade setups that you're able to scale in size. So I'm getting a lot of feedback about traders taking trades and scalping pips and whatnot. That is not my objective. My objective is to be able to identify a trade setup where I'm confident that they've either locked in the high or the low for that session and possibly the day for a move where they're going to go 50, 100 or 150 or more pips in that direction with a 1-bar stop. Now when you understand the power of that, yes, it does take some skill and some practice, and it takes time to be able to filter things out and not be caught into using other indicators and everything else. The reason why I say that is that when you start to narrow down your playbook to 2 or 3 trades, then you can start to see how you can grow your trading account, how you can grow your trading business, as Mike Bellafiore talks about. Not taking other trades that are wasting your time, or you're stuck in trades that aren't going anywhere for hours and you're just constantly checking the screen or the price, or you're holding on to a losing trade, whatever that may be. The object is to be able to go to the screen during a certain window of time, identify your trade setups when they set up properly. So sometimes that'll, even if you start to study Asia and study the previous sessions to understand where those trade opportunities may present on that given day, so that you have two scenarios possibly. One, the market might move up. If that's the case, does that fit your thesis for that trading setup? Or it moves down, whatever that may be. But as you've seen, if you've been following, you know that we see reversals off the high of the session, whether that's New York, London. We see trend trades happen in New York. We see them in London. There's trade opportunities, but the window where we talk about the 12 candle opportunity is today. We're going to try and clarify that a bit more. So let's go back and just review a couple of simple things. Okay, so we talk about working from the high and low of the day. Now that's really important. The next most important thing is the timings. If I can emphasize one thing to you in this video, the timing is what is most important. The markets for Asia, London, and New York, Europe, London, the 3-hour window, 8 to 11 p.m. New York Eastern Standard Time, 2 to 5 a.m., and 8 to 11 a.m. I can tell you with almost 100% certainty that within this 12 candle window, there is a trade set up every single session. Now, not all of these are going to be tradable for 50 pips, or they're not going to be tradable on the 15-minute time frame in terms of giving us an ideal entry. But if you understand that you might only want to take 1 or 2 trades a week, because as you understand that you can scale that in size, it's about taking less trades and bigger size as your skill and your confidence and your results dictate to do that. So each day there are 3 possible good trades: Asia, London, and New York. Now in that 12 candle window, what we will often find is that hour before will often take us either up or down. So if the market has come off of Asia, that first hour may extend the range, or it may stop hunt back into the range if Asia has broken out. That move back against the trend or with the trend will often be a trap or a setup. So for example, yesterday we saw the BOE blow off to the highs for 50 and 100 pips on the pound Canadian, for example. And that took us to previous sessions highs from the day before. Now, that first hour, as we got to the last candle of that hour, London was just about to open up. It's heading into the open of London. They're 50 and 100 pips in the GCAD's case above the Asian range. Now again, we know that there's stops below the Asian range where traders have gone long. That window, that hour of the market open, okay, so we've got our first hour is before, then we've got the hour of the market open, and we've got the hour after. That hour of the London Open gave traders an opportunity and price action confirming sell high signals back down to the lows of the day. We saw that every single day this week where there's been an opportunity, whether it's been in Asia, in London, or New York, where the first hour is setting up the trade. So what I'm trying to convey to you in this video is that you can take that 3-hour window now and even narrow it down further. Now, as we get further along through the day, like for example, if we have a day where Asia has dropped down and London has dropped down, and we get into the US session, and in that first hour of the market they sell it down, and there's been a pullback. We've had 50 pips, 50 pips, 50 pips, and we're at numbers. That first hour can then also be a trap. So they bring it up in that pre-market hour. So they're coming off the lows and they bring it up into the market open. The market open sells down to the bottom of the session, and in that third hour they either shift it if it's a trend trade, which we saw yesterday after the BOE, we saw a continuation in the US session, or a shift back to reverse and stop hunt traders who were short in London. So it's really important to conceptualize these 3 hours. This is often a trap or a setup, even though it is tradable. So some traders may have traded that move up for 50 pips or more into the London Open. And sometimes that may be a continuation of the Asian range. They may take that a bit higher before pulling it back at the end of the hour and then hitting it one more time at the London Open to set a high of the day up when London opens up, dropping it down, testing it a third time underneath in that third hour before they shift it away to move 50 pips. So it's really important to understand that first hour is often a trap or a setup. So if you are in a trade, be aware that as we get into that last candle and the first candle of the next London hour or the New York hour, that trap now, or if that's a trade, they may be reversing the market to come back the other way. Are they bringing you up high or bringing you down low in that pre-market hour? So if you're in an existing trade, they may pull it off. Now you've got an anchor point for possibly a measured move or a continuation long. One thing you want to be asking yourself is, if they move the market, who is trapped? So you want to start to look at the charts and recognize when we see 3 push patterns, those 3 pushes build up volume that they can shift and trap. They they can push 3 pushes, bring it up, sideways, and bang. 1 candle or 2 candles can trap all this volume. And once they're trapped, they are not going to go back up there, because that would unlock all those losing traders, and it would allow them to get back to break even or to minimize their loss. And once they shift it, they will usually shift it at least 50 pips into that area, because that's enough movement in most cases to bend the arms of most traders and either stop them out or margin their account out if they've taken on too much leverage. So very important, 12 candle window. So I need to clarify though, what the whole object of this is to be able to identify one trade that you're able to duplicate and scale up in size. So it's not about trying to trade it every day and catch the move, because the better you get, obviously your skill set will start to be able to filter out trades and identify 1 or 2 really good setups, and that is the goal. But what we really want to do is start targeting the really high probability trade setups that fit your criteria, that you can understand and identify in live time, and then position yourself in the market and be prepared to increase size on those types of trades. So for example, if you're selling the high of the day, does it have a tail on it? You know, people have asked me for trading setups. We're going to look at a couple today on some examples. But you need to go through your charts. And I'm telling you that the most important thing is the time, the timings. Time of day is the most important thing. Most cases they are at numbers, round numbers, 50s and double zeros, but also the highs and lows of the previous sessions. That is where the stop losses are. And in most cases they are at numbers from the previous sessions. So again, these 3-hour windows typically will start with a trap or a false move. You could be in an existing trend already from the day, from Asia, from London, but then as we head into that market opening hour, that can typically be again at the high or at the low for a move in the opposite direction if there's been a stop hunt, or if they're extending the range out. That first hour of the market open may also be part of the trap. So they may shift it a bit further. They might have worked it up, and they might take it up again, and they might take it up one more time in that third hour for a shift back in the opposite direction. Now again, if it's a trend trade, what you'll often find is the hour before may take it up, then London may take it down, or New York. They may hit it again, pull it back, and then continue the move in that third hour. So they hit the stops, they hit them one more time, they get traders counter trending that move, and then they continue the trend that's been happening already, that's in place. Timings, very important. But start to identify 1 or 2 trading setups. We see a ton of New York reversal trades. They drag the market down into the lows or up into the highs, and towards the end of this third candle, so often when you were up high or down low, that first hour will drag us even further into the wrong direction, or either into the extreme for the shift back in that third hour. But this is really important. You can narrow things down and start to really identify 1 or 2 great setups, especially if you're at the high or the low. I said yesterday that if you're inside of the high and low previous to the market open, be ready, because there's going to be a stop hunt to one of those extremes, whether it's a breakout and a continuation, or just hitting the stops and reversing for the false break. Again, the 3 things that markets do. They break out, they continue and trend, they break out and pull back and reverse, or they break out, pull back and go into a trading range. Very important. Study this 3-hour window, but more importantly, are you at the high or the low when the market opens? So hopefully you got some value out of today's video, traders. And again, remember, start paying attention. If the market's going higher, are they trapping volume? Are the longs that are entering the market with technical indicators and everything else, are they getting caught up higher and higher as the session or the day or the week progresses? The same thing happens Monday to Friday. So we'll look at some examples. Thanks for the feedback again. A lot of great comments, a lot of great results happening for people. Super exciting. And again, narrowing things down even more to 1 or 2 trading setups, trade less, try to scale those trades in size, and focus on not trying to trade all the moves in the market, but really stepping back. Use time to your advantage, traders. Narrow that window down. Look for the highest probability trading setups. Keep it simple, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.